Hello traders, the title of the video is how to analyze a stock chart more precisely per true. Well, in the first part of this tutorial, talking about how to analyze stock charts more precisely, we were talking about this inverted head and shoulder chart pattern. We were talking about 138.2% Fibonacci extension level. And most importantly, in order to analyze stock chart more precisely, in part 1, we were talking about going into the mind of bullish and bearish traders so one can make profitable trading decision. So one may choose the right side, the winning side, to buy or to sell. In the second part, we want to talk again about how to analyze stock chart more precisely. But this time, we're going to talk about, the volume bar, all right? So in order to analyze stock charts, more precisely, all right, one must be able to interpret the volume bar. So in the first part, we were saying to you that the bearish traders are the winners here because the price failed to go above the 138.2% Fibonacci extension level. All right. Now we want to see whether they are controlling, the price at this junction, or whether the bullish traders are now coming back. In order to understand that, we need to pay attention to the volume bar here. All right. So if the bearish traders or the bearish market participants are controlling the market, the price must display lower lows and lower highs. Now, the second thing that we need to check whether the bearish traders are controlling the market is that is the price confined in a declining channel. Now, you need to be careful when we are talking about declining channel, because sometimes you may see a declining channel on the hourly time frame, a rising channel on the daily chart, and then another declining channel on the weekly chart. Which one should you believe? All right. Now, personally, I would say to traders that when you see, the price in a rising channel, because why we need to use the monthly chart is because the yearly position traders that are using the yearly chart, their signal time frame is what? The monthly chart. So we need to give a lot of consideration to the monthly chart, a channel. All right. So whenever you see the price popping out of a channel on a monthly chart, you need to give a consideration to that, because those are the highest, or the most, influential market participant, changing, the market sentiment. Going back to the topic again, how to analyze stock chart more precisely, part 2, using the volume bar. All right. So bearish traders are controlling the market. The price will display lower lows, lower high, and also should stay in a declining channel. If the price is displaying lower lows, lower high, but it starts coming out of the declining channel, it is a weakness for the bearish traders. So this is what we see here now. So though the price couldn't break above the 138.2% Fibonacci extension level, and also the price was in a declining channel, displaying lower lows, lower high, now suddenly the price is coming out of the bearish channel. This is the first indication to us that the bearish traders, though they are the winners at this point in time, they start losing a bit of control. Therefore, we need to pay attention to the volume bar to see what is going on. In fact, if one wants to analyze stock more precisely, one must be able to be fluent in volume bar analysis. All right. So here we are. So I talked about it before, the surge in trading volume above average trading volume. Here we are. We have one here, another one here. So you see, the red volume bar doesn't mean sell. It doesn't mean buy either, right? So you see here, after the first volume bar, which was above 112 million shares being transacted in Liberty Interactive Corporation, EPIC QVCA, all right? After the first volume bar, the surge in trading volume bar here, we see that the price came down very fast. So what we need to do, because it's a surge in trading volume bar and it was a bearish candlestick bar, we must place a line at the low of that candlestick bar after that candlestick bar is closed. That's the blue line there. So it closed there. So if we want to ascertain that first surge into the volume bar are bearish traders, the price might display lower lows and lower highs, which means it must go below that low of that long candlestick bar and find a resistance. But you can see, if you look carefully, as the price did below that low, people bought it again. So the second candlestick bar, you see, it went below it, but people push it back above it. Now, the second candlestick bar closed below it. Now, as we are expecting the price to find a resistance below that blue line in the zone of $20 or $19.32, it quickly closed back above it. It's not looking very bearish, yes or no? It's not looking very bearish. After that, a surge in trading volume bar, there are some bullish, we can say courageous bullish traders trying to push it back above that blue line. Then we have another surge in trading volume bar. I'm talking about this one here, which happened here, with the tail here pushing the price back above the low of the first candlestick bar. What's going on? But now, if you look carefully, my friend, after those two surge in trading volume bar, the price did not form a new lower low as such. So we can say this one here. If you accept that this is a low, a new lower low, which it is, but you can see the price came back. It didn't close here, but it closed near that low of that long candlestick bar. Why? Normally we would prefer it to be away from it. A new lower low should be completely different from the prior low. But here it is quite close to that prior low. It's not looking bearish, yes sir. But not only that, the price now finally returned back above that low. So the first candlestick bar here, we may say that's the signature of the bear because they push it down all the way here. That low is very important for us. But after those two surge in trading volume bar, the price is no more below that low. It's now above it. Not only that, it's now out of the declining channel. Now, what is this? This is meaning to us that though the bearish traders are controlling the price at this junction, they start giving away the control to the bullish traders, and those two volume bar are more bullish than bearish. If they were bearish, we will see a new lower low here, but we did not have a new lower low. So at this point in time, we will give it to the bull that the bulls are coming back big time. So the second surge into the volume bar, we have 124 million shares being transacted. So apart from looking at the chart itself, using area wave, for instance, to analyze the price structure, paying attention to the chart patterns, all right, apart from those chart analysis, apart from going into the mind of other traders, apart from using the Fibonacci extension, one must also use the volume bar to analyze the stock chart more precisely. So you want to see the fuel. All right, this is what we are talking about. The volume, see the volume as the fuel. All right, see the momentum as the speed. All right, but the most important thing in the financial market, as I told you before, is what? All right, the market participant. If they don't buy or sell, nothing will happen, all right? So we are in the first part, we want to go into the mind of the bullish and bearish traders, analyzing the chart and see where we are, which group is winning, and we choose one side. In the second part, we want to use the volume bar to understand where is the fuel heading. What is the fuel for the bullish direction? Is the volume bar, the fuel in the volume bar, for the bearish move, all right? How do we know that the bearish traders are controlling the price? The price is confined in a declining channel, especially on the monthly chart, and it's displaying lower low, lower high. The price out of that declining channel is indicating, is the first sign to us that the bearish traders are losing control. Now the volume bar, especially on the monthly chart, is alerting us that the most influential market participants, who are the position traders, are now buying this stock, Liberty Interactive Corporation. The price out of that channel. Does it mean that we just buy and keep our fingers crossed? No. Now we have a trading setup. You see here, this candlestick bar will close above the level of $23.92. Very important for us. And then we implement a top-down trading method to trade it. If the signal fails, we come out. If there is no signal, we don't create it. Very simple, very powerful. Different time frame trading method is about trading like a pro. Alright, so this is the second part of this tutorial about how to analyze stock chart more precisely, and we want to use the volume bar to analyze, okay, to confirm, okay, the price structure. Another thing I need to mention to traders here is that last time I was pointing to you that we have this inverted head and shoulder chart pattern. This is the head, the left hand side shoulder, the right hand side shoulder here, and the neckline here, which I draw in the conservative fashion instead of putting here. Alright. Now what do we see? We see at the point after the surge in trading volume bar, we have what? Which pattern do we see now? We have a bigger pattern, which is what we call the cup and handle chart pattern. So where is the cup? This is the cup. Okay. Color it now into red. So now we have the cup. And what do we have here? And this is what you see. When above a little bit, like came back down, and this is the handle here. A bit messy cup and handle, the funny one. It is a cup and handle pattern. The price now breaking above the handle of that cup and handle chart pattern. The ultimate target is still in the zone of $44. The midpoint target at $33.95. One step at a time, it will become totally bullish if it breaks above, okay, the $29 zone, which is the 138.2% Fibonacci extension level of this bullish move, as we have said in part 1. To summarize this video, the next step to analyze stock chart more precisely is to interpret clearly and correctly the volume bar, so one may understand, okay, which side is more likely to control, okay, the price at this junction, and we will use only the surge in trading volume bar. All right. One more thing to close this video, if you look carefully here, when the price was in this rising channel, it indicates to us that the bullish traders are controlling the price, and the price must form higher lows, higher high. Now, if the price come out of that bear bullish channel, it's indicating to us that the bullish traders are losing control. All right? But also, when the price is in a rising channel, as I told you, we want to pay attention to the volume bar. What is happening? All right? Price is rising, the volume is rising during the bullish move, and on the pullback we want to see the decline in the volume, so people are there's no demand to sell. This was here rising, volume was rising as the price going out, and declining as the price pulling back. People are not interested to sell it. But I also explained to trader before about the volume bar. There are videos at the Day Pro Trader, at 24 Stock Trader YouTube channel, and I explained this clearly that sometimes the price can go up on a light volume. This is the case here. You see this section here on a light volume. The price is just going up on a light volume. I'm not going to dwell on this. Here again, you can see here that there was a volume. The volume was rising and the price was going up. But each time the price tried to come back down, there's no demand to sell it. There are more to this when we talk about volume bar. Search videos about volume trading for Day Pro Trader YouTube channel, and also for 24 Stock Trader YouTube channel, where I was explaining to trader, or go to www.dayprotrader.com, click on stock volume trading. All right. So here we are. We can see that the price came down on a high trading volume, but did not form a new lower low. This is what we call a negation. So a trader was asking me about a negation. The negation of a signal is the opposite signal. That's it. So there was a question about negation. Negation, you are expecting something else happen. It's a denial, okay? Refuse, denial is a negation. So you are expecting something. Sometimes traders do not take advantage of that because they buy, price going down from a lower low, lower high. It's telling you that don't buy, all right? Look for an opportunity to sell, implement a top-down trading method, but sometimes people fail to recognize that, okay? Or price from a double top, now suddenly it goes back above that double top. What is it telling you? It's a negation again. It's telling you, no, that's a false double top. All right? And so on, and so on. So if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. We are the GSTW24 traders talking about how to analyze stock charts more precisely, a part 2. Happy trading to you all and speak to you soon. If you think that this video has been useful to you, let us know by giving us the thumbs up. If you think that this is another blah 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 blah, alright, please let us know by giving us the thumbs down. If you think that is an essential tutorial, feel free to share it on Twitter, on Facebook, and also on Google+. Happy trading to you all and speak to you soon.